Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's day is the 5th of August 2021. Be smart and use common sense is probably the term I'm going to use today. The market's going crazy. Every week we seem to be up and up and up. It won't always be this way, so be careful and as I say, use your common sense when you're making your decisions. Okay, my name is Richard Lee and I manage the stockradar.com.au website for you. Today, after we go through the markets, we'll look at two different trading model signals. What are they and how do they differ? You probably prefer one over the other because there are different people in different markets, and that's okay. I'll explain that in trading tactics later on. Okay, so the format we're going to go through today is, as usual, kick off with the overseas markets, have a look at the ASX 200, look at the Stockradar portfolio, how that's performing, and the ASX stocks. And in trading tactics, which is a very important part of what I do, I'm going to look at the trend reversal and the new high, which is the two signals that I use and how they differ. Okay, so let's go straight through to the markets. Dow Jones Industrial Average is going up, holding the trend. Volume's okay, momentum's okay. It's slowed a bit because we had the sideways movement, but all seems fine there. We can crack onto the Nasdaq. Again, similar picture. It's broken out of its little trading range. It's moving higher. Volume's good. Got down here solid volume. As the index rises, there must be more buyers than sellers. So although this is a little bit hard to read sometimes, the green bars when we go up and the red bars are a down week. So this market is very strong. It's holding the uptrend. So there's no reason for concern from my point of view. There's nothing flashing red at the moment or even amber on the Nasdaq at the moment. So all signs are good. Okay, commodities, Brent crude. We've got a little bit of pressure here on the upside here. On the downside here. We've had a little bit of trouble here at R1. We've gone sideways. This week we've come off quite a bit. Pressure's building here and we've got a little trend line, some moving averages and a couple of areas there. Just show a bit of support bubble here, a bit like copper, which we'll have a look at in a second, but we can see some selling here at the top of the market up there. Hasn't really followed through too much yet, although this week we are seeing, a bit of pressure on the downside. So there's a battle going on there and the sellers are just looking like they're taking a little bit of control this week and we may be in for a correction possibly. Upside acceleration has slowed, so this one's probably flashing amber rather than red at the moment. So Brent crude, pressure building there. We go on to copper. It's slightly more advanced here. We've come back a little bit off this high here and we can see these big down weeks here and a bit of volume, a bit of heightened activity here. We've had a rally. It's tried to get back to that high and it hasn't been able to achieve that at this stage, and we've had a down week this week. So that's potentially putting us into an out situation. Will this turn into a lower high and put pressure on S1? So we're in relative balance while we're in here, but the sellers in this position are starting to take a bit of control at the moment. So the buyers try to recover the rally, but it's not going anywhere by the look of it, and the uptrend has slowed a bit. So copper's just taking a pause for breath. It may come back a bit further at the moment. Gold, we can have a very brief look at that one. Nothing really. It's sitting in this nowhere zone here. What I've actually put here this week is odds increase that this will develop a lower high, putting pressure on S1. Now, we're looking at this market here. It's crawled up here. It's got to a resistance point. It's had a thump down. It's trying to crawl up again. There's no real oomph in this rally. So this is looking like it may be a lower high. And we know what we think about lower highs. We don't like them very much. And that could well put pressure back on S1. So we're still in nowhere zone. I'm neutral in this situation. So we'll just wait and see what happens. The momentum's neutral. Support looks okay, but there's nothing really that stands out at the moment for gold. So it's going through its corrective phase still. Okay, so let's now go to our ASX 200. This has been an amazing rally. And if I look at this here, what I put in here today, now we can see that the market has now gone up about 55% since the COVID low back here, which is an enormous rally. And we can see this week again, it's just piling on the gains again. We've had a little bit of a blip in the resources sector, but nothing really to worry about. All markets come back at some stage, and then they go on again if they're in a trend. So here we look at here, I've just got down here, I can remember this clearly last year when we had this crunch down, everybody was concerned, everybody was looking for another leg down. So here we thought COVID was a very bad thing for the markets, and amazingly enough, we're invariably wrong. And that's just a truism. Now we know COVID is a good thing for the market. It's amazing how our certainties can be wrong. So As far as the market goes, the smaller businesses are suffering. They're having a big struggle, but the bigger businesses, the online businesses, the big techos, they're all doing pretty well, especially the American market. And they've been driving the indices higher as concentration comes. And even in our market, we've got those top 15 or 16 stocks that really have been driving our market higher. So, because they take up about 50% of the market cap of the index. So that's why we're going higher at the moment. At this stage, there's no reason to doubt we won't continue to go higher. Okay, so we've got new highs for the ASX 200. The Stockradar portfolio is flat. At 83 stocks of 83 of 189 covered. I cover 168 stocks and 21 EFTs. The portfolios are back to being full again. The 5 stock is full with 5 stocks. The 10 stock is full with 10 stocks. The conservatives has been a little bit different. It's actually come back down to 6 out of 20 now, which is only 30%, which is quite light on. Having said that, the major part of that conservative is not losing money, but the 6 that are going along very well. So whether it's James Hardie or BHP, they're all kicking along nicely. So the ones that are going up are being very handy indeed, and just pushing that conservative portfolio up slowly. And the sectors I review: the banks, industrial materials, and property. There's a slight change in the industrial material sector, and we've seen the banks have a bit of a trade-off, and I'm going to have a look at a bank a bit later on for you so you can see what's happening there. So they're also in diversified finance, healthcare, and commercial and consumer services sectors that I cover. There are some good stocks in there, although they're quite low on the ratings. There's some very good stocks in those sectors. So have a look on the trading centre and you can see what those stocks are, because they're doing very, very well. Building our portfolio, which we've been doing since March, it's actually up 13.7 since March. So annualised, that's pretty good rate. All stocks are up now, even include Adelaide Brighton, which we saw kick higher again this week. So actually all 5 stocks in that portfolio are doing well, which is unusual, and that probably reflects the type of market we're in at the moment. It really is a market you need to make money in, because it won't always be like that. Okay, I keep saying that, but it's true. So it can also be the luck of the draw with your portfolios as to when you start. So I happened to start in March, and considering the market was very high, that was a fairly game thing to do, but you just never know what the market's going to do. And from March to July, it's just continued higher, so the portfolio is good. But it will depend on when your portfolio starts as to how you go. But even if you struggle to start with, your turn will come. These phases will hit your portfolio, and it will bring it back. So the portfolios don't perform up and down, up all the time. There will be flat spots. But generally will continue higher, as we see on the homepage of Stockradar. So that's the portfolios. So we ride those waves when they come, and we ride them hard. So the portfolio, the ASX 200 here, looks fine at the moment and is going up. So let's get to some stocks now. Metcash, which I looked at last week. Let's just put this all back in place. Metcash, which we looked at last week, has continued higher again this week. Now, this is a fairly big picture. I'm showing you this because we had this big spot here between 2018 2020 where the stock really went sideways, and it really was a long period of price consolidation from my perspective, under the umbrella of pressure from Woolworths and Coles. Now that seems to be changing a bit. It's now breaking free in our little community grocer, and I've got one just down the street, the IGA. I use it all the time rather than going off to Coles and Woolworths where there's a lot more people. And so it's benefiting very much, and I think, well, I mentioned before, it's also going to the home renovations with the Total Tools purchase. So it's an interesting stock, and the market seems to like it. It yields a bit. It's made a new high. So, this is a fairly healthy looking stock. The volume is very good on this kick higher. Momentum's kicking up again. So trend intensity rating is 10. And you can see here, really, if we look at this, how these trends develop. You see the trend develop, or the waves that I look, the wave analogy that I use, the wave builds. In this situation here, under the reversal pattern, the wave then breaks and then it rolls on. Okay, and it continues higher. It did have a tough period here for a while, but we held on there, and it's looking okay. So making new highs and looking excellent at the moment in Metcash. So roll on that wave. Okay, now Iris, I know it's under a takeover offer. It was under after we got into it, so we hold into that situation. I don't know how valid this takeover offer is at the moment. We'll have to wait and see what happens there. Everyone's rebuffing it, but for the moment, Iris is doing pretty well. Now, we did have a break up here. All stocks are different, all trading patterns are different. Now, this one was a very, very difficult one because it actually broke up here, but I always follow the rules. I have to follow the rules, otherwise the members will come down on me like a ton of bricks. So officially, this was a trend reversal and our buy signal was actually up here. A bit high, but still, that we've held our metal, and as long as we work with our stop, we're never going to do any damage. Whether we buy it down here or we buy it up here, we still won't use the same stop, and it will still have the same effect. In this situation here, we've got this little drifting pattern here, and the market's kicked higher again, so we're now looking a bit pretty at the moment, which is good. Now, when I look at this price movement, we've got the highs up here, we've had the big downtrend here, we've had the break up here, the trend is broken, the wave is broken, we've got this impulse, drift, impulse, characterising an uptrend. That's how they look. They have impulse moves and they drift, and that's how uptrends work. So how do we build our confidence? We understand the price behaviour. Buyers are in control of this stock. Okay, when sellers start to come on board, then we worry about it. But at the moment, with this sort of pattern here, a possibility of a new high, those odds will increase further and further. And a new high above this all-time high would be a significant thing for Iris. It's in demand, got a little corner of the market that people like, people want to get a hold of it, so that's why people are bidding on it at the moment. Now, if I just blow this up a little bit, so you can see the volume, get rid of that big spike back there. You can see here the two big spike ups over here, where this one here and this one here coinciding with the price jumps. Momentum is good, so all is good here. Trend intensity rating of 10 for Iris. Okay, the next one is a new one called Breville, which we actually just started coverage on Breville, but it's just broken to new high, so let me just fix this up a little bit for you. Okay, now we go, just expand that over there. Bring this back here. Okay, so we can see the COVID disaster here, but we can also see that the buyers pounced on this stock. Breville, it makes coffee machines, it makes things that we use in the kitchen all the time, and we're probably using them more and more and more as we stay home. So this is one of the stocks that's going to benefit from it. Okay, so it's recovered very well from COVID. It's made new highs. It's chopped about a bit here, but we've just started covering this stock in June. As we revalue every 6 months, or we review our stock coverage every 6 months. And it's now made a new high, so it's punched to new highs, volume is good, momentum is good, trend intensity rating is +9, Breville looks very good, a new high. We never know where they're going to take us. As long as we work with the stop, we keep ourselves safe. Okay, next one is Adelaide Brighton. This is the one in our little portfolio that we began in March. And although we've had a very tough time again, this proves that patience can be rewarded, and it is in that industrial materials sector with the Borals, with the Fletcher buildings, with a lot of the other ones which I'm going to sort of mention to you. Things like Boral, Fletcher Building, JXX have done very well, but we're also now starting to see ABC, Aurora, RWC also start to contribute to that sector's strength. So there's sort of a bit of a shift in demand here, but Adelaide Brighton is low on the scale, on the price scale, so it's now getting a bit of demand, and we're now seeing it's jump higher. It's had a very good break up this week, which is now boosting our portfolio very nicely. And we can see here the breakup is coincided. Volume is okay this week. We've only got 3 days in there. We've got a couple more days to go yet. So I'm hoping that might look a little bit better, just to give me a little bit more confidence in this move. And momentum is fine and kicking higher. So the rating is 10 at the moment, and it looks pretty good for further gains here. And Adelaide Brighton, as I say, it is fairly low on the price scale for its history, and could well have a lot of moves up yet. If we just look back, there's some of these moves, so you can see where it's come from and where it is now. So it's got plenty of potential to move up from here. So Adelaide Brighton's a nice one. Okay, Suncorp we reviewed a few times recently. It just keeps going up, steady as you like. Sorry about that. Steady as you like. Suncorp has just been a very steady mover ever since we broke up here back in November last year. Very sluggish, but our stop's still held. We've got the trend reversal up. It's just been up, slowly but surely, and it's now starting to push through this R1 resistance level. Trend intensity rating is 9. It's up 16% since January, and that's not bad. You analyse that out, it's a pretty good gain. Even 16% is not bad. In this market, well, maybe not, but it's still 16% is better than negative. Now, if I just could look down here, I've just noted down here on the volume for you, the green bars, what they mean is the price is rising, okay? So if the price rises, it gets a green bar. If the price goes down, it gets a red bar. So you can see there's been a lot of, apart from back here when we had a bit of a selling test, we've had a lot of green bars here, especially the big green bars. The price increases, been very good. So I'm looking hopefully for this to gain a little bit more this week to give us a bit more confidence in that. But Suncorp's looking very good, and it is kicking higher, and it's very steady. And again, I did mention to you before, some of these diversified financial stocks are doing very well indeed. Not all of them, but some of them are. So again, you can't, top down is not what I do, it's bottom up. So I focus on specific stocks rather than on the sectors. The sector thing is really just a matter of how I organise my data more than anything. Okay, now I mentioned to you I look at a bank for you. National Australia Bank. Okay, now all the banks have gone through a bit of a sideways pattern for the last couple of months, and NAB is no different. It's gone sideways since about March, chopped around between this 25 area, 27, 28 area. It almost broke down a couple of weeks ago. This to me is a good sign that it's actually held and hasn't broken down. The sellers were trying to push this down. It hasn't happened. This is a good correction, a good consolidation of this trend up from $18, $20 where we saw it break up. It's moved up to nearly $28, $27. So it's just going sideways, just correcting, just consolidating the move. It looks okay. There's no selling evident. Momentum is slow, which is natural in this situation. Trend intensity rating is still 7. So the banks, to me, I've had a few questions about the banks recently. Unless they break down, I'm not too concerned, and they haven't broken down. And I know CBA is doing pretty well again, which has been the star performer in the banking sector. But the other banks also, ANZ, NAB, Westpac, have all done pretty well, as well as the regionals. So for the banks at the moment, they're holding, and I quite like this test here, and the buyers have held this stock up and kept pushing it higher again. So that's good. I don't know what it's done today, but it looks okay to me. So that's National Australia Bank. Bapcor, we looked at a couple of weeks ago, and we can just see it's been banging on the door of this area here, up around 825, and just can't seem to get through. So let's just have a look at this. The trend intensity rating is still 0 because I've got no trend, but everything else is pretty positive. So we had an uptrend here, then we've had a long consolidation here. We're getting some sort of upward slant here, which to me is a good sign. It gives me a clue that the buyers are starting to get control of this. It's just a matter of when these sellers actually give up and go away, and they might have to reverse their positions and become buyers rather than sellers. So we've got the trend, we've got the consolidation. Have we got a new trend developing? Well, the confirmation will come if it starts to break through this 830 level and give us a good signal here. Volume has been pretty good down here. If I just bunch this up a little bit, we see some nice steady green bars here. Momentum is positive. It's above the moving average. So all looks good for this. If it kicks higher here, if it kicks through here, it's going to get a very high rating fairly quickly on there. Price is the most important thing to me, and so that's what really will kick the rating higher. Okay, now I went through a stock last week called Horizon, which has been downtrodden and belted about a bit, and another stock that I want to have a look at this week, which I promised, was Simic, which it's had all sorts of problems over the years, whether it be corruption or takeovers or whatever it's been. And we saw this big high back here, 2018, where it couldn't get through. It was going through, it was just above $50. Bang, 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 came back, rallied again, came back, rallied again, eventually failed. Now, what we're actually getting now is almost the reverse of that down here, which I'm going to have a good look at in a minute. So that fell down. We had a big downtrend here. So what I'm going to focus on now for you is this area here. Simic still rate is still a -5, so it's not hit the boards yet, but it's on the radar to watch, and I'm going to tell you why. Because what I do is I try and build evidence of a reversal happening, and at this stage we are getting evidence building as we get this slow change from sellers to buyers. So the downtrend's been broken here. That's one thing. Accumulation pattern has followed, where it keeps going down, 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 and keeps holding. The buyers keep holding it there. So it's very good support here at S1. Okay, then so the buyers begin to show their hand here. We can see some green bars here. We can also see here there's some green bars here, and the price is pushed up pretty easily here. Okay, and a lot of selling here in this bar here, but the market absorbed it. So this pattern is still good, and we've actually got a small trend reversal pattern occurring here. And we can now see the buyers begin to show their hand. The exponential moving starts to go flat, which we want to see, and also we want to see the momentum index drawing back to zero. Now this is all just a slow burn from sellers to buyers, and eventually the sellers will give up and go home. And you can even see here on this last push down here, the selling wasn't really that aggressive. So the picture is looking good. We just need to get that trigger, that signal that tells us that the sellers are going to give up and go away, and the buyers are going to take control of this stock and start ramping it higher. So buyer interest is pushing prices up easy. That's a good sign. So keep an eye on this one, and if you want to follow it, you can sign up to Stockradar, and we'll give you the signal when it happens, if it happens. Okay, so that's the stocks I want to go through for you today. I hope that gives you some idea of what I do and how I do it. Now I want to go into trading tactics. Trading tactics, last week I went through the basic service and the premium service, how the difference was. This week I want to talk to you about the two signals that I use. They're simple and easy to focus on, the trend reversal and the new high. So what's the difference? So we're going to have a little look at them today. Okay, so first off, we all need to have a strategy. We need to have a strategy and a tactic as to how we're going to play it. So my strategy really entails trend reversals, new highs and stops. Trend reversals and new highs are what get me in, the analysis, and the stops are what gets me out, and that's the money management side of it. So they're the three things that I really use to trade. So I just put those three things together. It's just like a jigsaw. Put the pieces in place to complete the picture. Okay, and that's what we try and do. And we don't want to try and anticipate. We don't want to predict anything. We don't want to forecast anything. We want to see what's happening, and we want to jump on board when the move starts to happen. So that's the simple strategy and the tactic I use. Both the signals I use, the trend reversal and momentum, the trend reversal and the new high are momentum signals. It's all about assessing acceleration, just like when a wave breaks, which is the analogy I always use, how it breaks and how it rolls out and how it develops, okay? So, trend reversal and new high. These two signal setups provide all the clues I need to detect high odds probabilities of price movement. That's what I'm trying to do. We're not trying to wonder or guess, we're trying to say this is a fact. Prices are moving. Are they going to continue? Yes or no? We make that decision using our tools. So we build the evidence to confirm these two signals. So what is the trend reversal? The trend reversal is really a buy and weakness. In most markets there's buy and weakness traders who like to buy things when they come back, and the other side is momentum traders who like to buy things when they're going up. Okay, and so what I try and do is cater for both. The trend reversal is usually a buy and weakness when we're seeing that shift. So we're looking for building momentum about to start. So I'm trying to make sense of the buyer-seller behaviour, like I did with Simic or Horizon, when we're trying to look for this shift in control from sellers to buyers. So the control moves from those sellers to the buyers, and when that control happens to move to the buyers, that's when we want to go. So we're trying to assess this shift the whole way through as to what's happening and how it's happening, and we have our own strategy to do that, our own tactics. So that's the trend reversal. The new high is really buying a momentum extension. So we often get markets that trend high, and we might get stopped out. Or we may not get stopped out, the market might go sideways for a bit. So what we're looking for is a break of a new high or an old high, and that often triggers a new momentum shift. An all-time high is the best you can possibly get, because that's an all-time high is a real shift in momentum. So buyers overcome selling phases attracted by old highs or previous resistance, and when they do, this momentum can be an unstoppable force, as we know, because markets generally go a lot higher than we ever think they're going to go. Okay, and it can be days when we've seen JB Hi-Fi do it, we've seen CSL do it, recently we've seen Breville do it, and there's all sorts of stocks that do it all the time, and we think, well, I can't buy the stock because it's too high. Well, you're probably a buy and weakness trader rather than a momentum trader. I love momentum. I love to buy momentum. I love to buy strength. I love to buy the waves that's breaking. So that's the momentum signal. Okay, so trend reversal and new highs, what I do. Next week, I'm going to look at the individual attributes of each of them and our purpose in using them, okay? So we all need a purpose and a strategy to get there. Just like these guys, he's got a clear purpose, and that is vital when you're trading, because there are all sorts of different things we can use. But we can't use them all, because if we use them all, we'll get totally befuddled and confused. So it's important to have a really clear and precise strategy, which I have, and I just use price as my tool, and I use that to help me make my decisions. Okay, so that's really most of what I want to talk about today. So I thought to leave you with what I was going to say in the marketing. You go and take a free trial of Stockradar. You want to look at some of these stocks. You want to see how they're behaving. You want to catch up on Simic or Rise and see how they're going. Take a free trial for a couple of weeks. See how we do it. And if you like it, subscribe. Be my guest. The newsletter was out last week. There were 2 articles in there. One was on the exponential moving average and how I use it. And the other one was on stops and why I prefer to use stops than indicators when I'm getting out. So that's an interesting article for you to have a look at. So being clear about your objective and how you are going to get there will simplify everything for you. Clarity of trading decisions eases psychological stress, and it then becomes a very time-efficient and effective process that inspires higher quality and more reliable trading decisions, and that's what will follow if you have that clear strategy. Okay, so good luck for the trading week. Thanks for listening. I hope you all learned something today. I'll see you all next week.